Hi, this is Anthony Parent of Parent and Parent LLP, the IRSMedic, and welcome to Part 5 of our 2014 Guide to IRS Offshore Voluntary Disclosure. In Part 4, we learned about the 5% penalty and why a lot of people won't qualify for that. And now in Part 4, we're going to talk about the other program that people hope they can qualify for because it is a bit easier, and that is the Streamlined program. And just a little bit more about us here, Parent and Parent LLP. We are tax resolution attorneys. We are based in Connecticut, and we serve taxpayers around the world. And so what is the Streamlined Offshore Voluntary Disclosure Program? Well, it's a lot easier because if you are an expatriate, which is one of the requirements, there's only a 3-year look back that you have to file returns that you did not file. If you have filed returns, Streamlined OVDP you will not qualify for it. One of the other requirements, which I've seen this number fluctuate somewhat, is that you had less than $1,500 in unreported income. Actually, that's unreported taxes. That your total tax bill is less than $1,500. We've seen that fluctuate somewhat, and these rules somewhat are open to interpretation, and we're going to go over some of the reasons as to what happens if you file a Streamlined OVDP when you in fact didn't qualify. You would file a Streamlined OVDP when you're not worried about criminal exposure, and as I've discussed before, 96% of our clients really don't have any criminal exposure to worry about. Really, the reason why they want to get into an offshore program is to avoid significant FBAR penalties. One of the requirements and one of the very difficult to understand concepts, because it's very misleading about the Streamlined, is that the IRS says you should be a low-risk taxpayer to get into the Streamlined program. Well, what does this mean? Well, low risk doesn't mean criminal turns. Again, most people are not criminal at actual criminal risk unless they did some intentional acts of evasion. But what they mean by high risk is your audit risk. Which we'll go into a little bit about what happens when the IRS doesn't like your Streamlined disclosure. Again, I put down the wrong thing again here, less than $1,500 in unreported income. No, that's $1,500 in taxes, okay? You file 3 years of not amended returns, right? See, this is wrong right here. Another thing that I put in here wrong. It's 3 years of returns. If they're amended returns, you don't qualify, and you have to file 6 years of missing FBARs. Okay, this is, believe it or not, a lot easier than the standard program, even though it somewhat can be a little bit onerous. And it's really my opinion that they should have made this available to pretty much everybody, as most of our clients who are in the offshore program made at worst negligent mistakes. So let's just talk about the high risk. These are the people that should not, according to the IRS, go into the Streamlined program. High risk is if you have lots and lots of U.S. income and you didn't report that. So there's a reason that sort of makes some sense because, well, just because you're an expat and you had U.S. income, what's your excuse for not filing your U.S. income? You must have known that was subject to taxation. So it's sort of hard to come up with a justifiable reason that you didn't file your returns in the first place, even though there are justifiable reasons. If the IRS sees evidence of significant tax planning, that you were trying to do something intentionally to avoid taxation, they say you're high risk, and they recommend that you don't do it and go into the full OVDP. If you're in non-compliance with your host country, that is, the IRS wants to see that you were in compliance with the laws you were aware of. If you're in another country, I think the only country in the world that doesn't have an income tax, or one of the only countries in the world that doesn't have an income tax, is North Korea. But they do have an income tax on expatriates. So even if you were in North Korea, you would need to be in compliance with their taxing regime. You would want to have your accounts in a country If your accounts were in a country that was not your host country, the IRS would be wondering why that was so. Were you trying to avoid taxes in your host country as well? You can see that these rules, one area that I could see there's going to be some questions immediately is that a lot of expats, especially in Europe, move country to country. And so that, typically, if you're in the UK, you might have accounts in the Isle of Man because your Isle of Man account is not taxable in the UK. And then you might get a job in Belgium, keeping your Isle of Man and keeping your UK accounts. In a situation like that, the IRS says not to file a streamlined OVDP, but go to the full OVDP. Because what happens if you don't qualify for a streamlined and you do it anyway? Well, the IRS says you're subject to an audit. You will also be subject to criminal charges. But you know what? You are anyway. Under the streamlined OVDP, there's no protection from criminal charges. Again, these are cases where they're just extremely unlikely anyway. And so it's sort of odd that the IRS puts that in there. If you file this streamlined, you're going to be subject to the criminal charges that you are subject to anyway inside the program. The risk that that we're really wondering, and we see some guidance coming out of this so far, but I have a feeling it's going to go a little bit different, is that if you are subject to an audit, here's the difference. If you are in the standard offshore voluntary disclosure program and you opt out for a lower penalty amount, you'll be subject to an audit. And during that time, you'll be able to argue with the IRS that you should have a very low FBAR penalty or nothing at all. One of the reasons is that you voluntarily complied. Okay? So you got that? You voluntarily complied, therefore you should get no FBAR penalty. One of the factors that goes into it, at least. Now, what happens when you are in the Streamlined program and you do it anyway? Well, let's say you are audited. Okay, now you're audited. So what's the audit standard? Is the audit standard something like the opt-out audit, or is it something different? Well, according to the IRS, it's the same audit standard that is with the OVDP. So you would say, aha, well, that sounds pretty good. Because now I went through this simpler program of doing the Streamline, and now I'm in the same audit process, the same exact audit process that I would have been in the standard program, but I've done it much cheaper and much quicker through the Streamline program. Well, there I would just say, I just not get too excited, because one thing is that in the standard OVDP, just be aware that the criminal protections do exist when you opt out. And see here in the Streamline, in a regular audit, they don't apply. So that, it's really a balancing. The reason why you want to do the Streamline program is because the cost to do it is much lower. And it usually is a bit quicker. And so really, I think to consider, if you're going to try to force one through, is really what are you trying to save and what are you risking? That's really the thing you want to look at. I hope this has enlightened you somewhat on the Streamlined program. This is Anthony Parent of Parent & Parent LLP, the IRSMedic. I hope you like it. Please subscribe to this channel if you do, so you can keep abreast of the latest updates. If you're looking for more information, go to IRSMedic.com. And if you're looking to talk to someone about making disclosure, you have some questions, call our OVDP hotline at 888-477-4258 or email info@irsmedic.com. Thanks for watching, and keep a lookout for part 6.